Yo, what's up traders? Welcome to a new video. In this video, I'm going to show you the top 10 technical indicators every Forex trader must know. So yeah, whether you're a beginner or an experienced trader, understanding these tools can significantly improve your trading strategy. So let's get started. Now we are looking at the gold chart, XAU USD on a 4-hour time frame. Yeah, I will be going over these 10 indicators. So first of all, we start with the moving average. So what you do first, yeah, of course, you need to have TradingView if you wanna copy me basically. If you wanna take a look at all the indicators and see how they perform, you need an account at TradingView. If you do not have one, just check out the link down below in the description. But if you have one, you go over here to indicators, and I have many favorites already. But the first thing we do is we enter the moving average. All right, so this is yeah, basically the most, I think, popular indicator out there. And as you can see, there are a few moving averages you can choose of. We cover two types: the simple moving average over here, and the exponential moving average, the SMA or the EMA. And yeah, so if someone mentions moving average, 9 times out of 10 he moves either the simple or the exponential, but most of the time they are talking about the simple moving average. So simple, yeah, it's a bit looser to the chart. The exponential is faster, so many traders, they say that the exponential moving average provides or gives yeah, better trading results because you enter the trade faster. But yeah, it doesn't always mean that if you enter the trade earlier, um, you will get better results, because we also have fake outs, for example. So yeah, it doesn't mean that if you enter the trade earlier, then you will make more money. But we have the exponential and the movie in a simple. Let's say I click on the exponential moving average. Over here you see a blue line, and the blue line means that it indicates yeah, let me show you. It indicates the price for the last 9 bars. Yeah, this is the average of the last 9 bars. But if I use the 20, it averages the last 20 bars, right? It shows you the average of the last 20 bars. What do many traders use? They use the 50, and yeah, we can also use again moving average, and they use the 200 over here. And let me give it a red color, for example. All right, okay. So what do you see right now? We see that the price is above the 50 and the 200 exponential moving average. So the price is in an uptrend right now. So most people, they look for buy opportunities, right? Because we're in an uptrend. And as you can see, if you took only buys, it would result in profit. Um, buy, and now we're looking at gold. So gold is really trending, as you can see right now. We're in a 4-hour time frame. But let me show you. Okay, over here we see that it crosses to the downside. So the blue one crosses to the red one to the downside, and from that moment we're only looking for sell opportunities. So if you took a sell over here, it was a win. Sell over here was a winner. Here it's still below the red one, so we keep selling, and yeah, it results in a nice win. And over here we see the cross again to the upside, and yeah, from that moment traders are only looking to take buy orders. So the moving average is a quite popular indicator. Many forex traders or stocks traders or crypto traders use this indicator. Okay, moving on to the RSI indicator. Let me delete this so easy for you to see. We look at the relative strength index indicator. Down below over here we see the RSI, and it's one of the most useful oscillators in forex trading. So the RSI helps us identify overbought and oversold conditions, and a reading above 70, so let me make it a little bit bigger. A reading above 70, so this is the purple area. Everything above the 70 indicates that the market may be overbought, while below 30 suggests an oversold market. Over here we see it's oversold. It's below the 30. As you can see over here, the 30. So that means that it's oversold, and it's likely that it would go up in the future, and that exactly happened from this moment here. It wasn't oversold anymore, and it went to the upside. But again, you have to be careful if you use this in a trending market, because over here we see it's overbought, and if you took a sell, it would result in a loss because it keeps getting higher and higher. So you have to be careful with that. But the RSI is also a really popular indicator. Next, let me delete this one. Let me show you the MACD. The MACD is a moving average convergence divergence. It has a long name. Let me zoom in a little bit, make it bigger. So a more sophisticated tool that not only follows the trend but also gauges the momentum. And the MACD consists of two moving averages and a histogram, which together help predict future price movement more accurately. So let me see. Over here we see a cross, and from that moment it goes to the upside. And over here we also see that these two moving averages are above the zero line. To the right side we see the zero line, so these two are above the zero line, and that also indicates that there's a lot of momentum, we're looking at a trending market, and in this case a bullish trending market. Over here the two moving averages, they stay above the zero line, indicating that we go into the upside, and that also happens. Over here we see that these two lines cross the zero line, and from that moment price goes down. So the moving averages, the MACD is also really popular and extremely useful for technical forex traders or stock traders or crypto traders. Next up, let me take a look at the other indicator, which is the I have so many struggles with the name Bollinger Bands. Over here, this is the Bollinger Bands, another classic indicator, and they measure market volatility and provide insights into potential overbought or oversold conditions. And notice how the bands tighten during less volatile periods and expand during increased volatility. Over here, it's a nice example. We see that the bands expand when this candle is going to the upside, but especially this one, it was a huge candle, and then we see that the bands expand, and then when it's a little bit a bit less noise, there are not many big candlesticks. We see over here that there's less volatility, and the bands, yeah, they are quite small, right? So there's less volatility, and then we see over here that it increases. We see a big bar, big candle, and then we also see that the bands become broader and broader and broader. So the Bollinger Bands is also a really useful indicator. How to use it? You can use it, for example, as a breakout. So if in this case the bullish candle closes above the upper band, you can take a buy order, and it results in a profit in this case. You can also use it as a indicator that's more for reversal trading, right? So over here you see that it crosses the band. Normally you should take a sell, but if you think that, well, if you see that the gold pair in this case is in an uptrend, in an overall uptrend, as you can see, it's an overall uptrend, then you can take buy orders when it crosses the lower band. So you basically buy the dips. So this is a buy, this is a buy, and then it goes to the upside, and over here you close with profit, right? So yeah, Bollinger Bands is also nice indicator. The stochastic, let me show you that one. The stochastic indicator also used by many people. Stochastic indicator. Again, we take a look down below. Over here, make it a little bit bigger. The stochastic indicator is another great tool. Excellent for spotting reversals before they happen. And it gives us a scale from 0 to 100, and helps identify potential price reversals by showing the current price relative to its price range over a period of time. So over here we have 100, then we have 80, and then we have 20, and we have 0. But over here, let me, for example, over here I see this. We have two lines, and they cross the 20 line, right? So the part we have the 20 and we have the 80, and in between these levels we see a blue color. So when it crosses the blue color to the downside, it's also kind of oversold. It's a oscillator as well. So probably soon price will reverse to the upside, and when it crosses the line, the dotted line, the 20 to the upside, we see also here that before the big move happens, we see already that if you enter the trade here, it would result in a nice win. So the stochastic is also a great indicator. Again, please bear in mind that only use it in a trending environment. So in the overall trend is again bullish, so don't use it, for example, here a sell or a sell or a sell or a sell, because then you would blow your account eventually. But again, use it for nice dips in the market, and then you can buy it. So that is the oscillator. And next, let me delete it over here. Okay, next up is the Fibonacci. You have an indicator which is called the Fibonacci, the auto Fibonacci retracement. But personally, let me see if it's used over here. Yeah, okay. So this is the auto Fibonacci retracement. I personally use this over here. So when I click on that, and then I can do it manually, right? I can do it manually, and that in my opinion it's better But if you do not know how to use it, you can use the auto Fibonacci retracement. But it's really not hard to understand. What you do, you identify the latest high. For example, over here, this is the latest high. Over here, this is the latest high, and you identify the latest low, which is, for example, here. Let me take a look. You get the Fibonacci retracement, you click over here, and you make sure that it's also over here. But well, yeah, you can do it like this, but if you really want to do it correctly, you start down below and you go over here to the way you want it to move, right? So we have this. Now the 0 is here and the 1 is here. We have the high and we have the low. And yeah, what it basically does is that there's a specific ratio. It's quite complex, but you use historical highs and lows to anticipate where support and resistance might occur. So over here we have the 50 level, and we see that it respects the 50 level, right? And then you can also use it as a profit target indicator, because you can close targets at the 0.27 level, which is here. But many people use it as a support and resistance indicator, so that when the market corrects and they go to the 50 level or the 0.618 level, and it respects that, from that moment, if you see it and you also see a bullish candle, you can easily take the buy trade, and then it goes to your desire to take profit. So the Fibonacci retracement is also a really handy tool you can use. But yeah, of course, I personally don't use it that often, but many people are quite successful with it. We go to the Ichimoku Cloud. This is a Japanese indicator, Ichimoku Cloud. And there are many lines and colors on your screen, and many traders think that it's too cluttered, and it's really hard to identify a great trading signal. But yeah, if you like this indicator and you practice it, you practice a lot with this indicator, then you could definitely get great trading results. But personally, again, I don't use this myself. In short, you see the green cloud and you see the red cloud. If price is above the green cloud, we're in an uptrend. And we also have three lines. It's called, let me see, we have the conversion line, the baseline, and was it the leggings? I believe it was the legging span. And over here you can just play around with it. But when there's a cross over here, we see a cross, and from that moment you can take a buy order. Now over here it starts to range, but eventually it goes to the upside. Let me see if I have another nice opportunity. The blue line needs to cross the red line. Over here, it crosses a little bit, slightly, and then over here you take a buy order to the upside, which results in profit. And over here, now it goes to the upside. Yeah, we see another cross here, a nice buy and profit. So yeah, make sure that some Forex traders, they delete this one, this line. Basically, if you really want to take the correct trades according to the Ichimoku strategy, then also this line needs to be above the green cloud in this case. So then if this one is above the green cloud, and the blue line crosses the red line to the upside, then we take a buy order, right? So yeah, not many people use the Ichimoku Cloud, but I see it regularly. But I don't have a feeling that it's really popular and many people use it daily to make good money, right? I see it in many videos, but I don't see it really in practice that someone is consistently using this, and also because it's too cluttered, and yeah, the chart isn't clear, right? There's the yeah. In my opinion, I'm not a big fan, but okay, who am I? We go to the next one, which is the ATR, the average true range, and the ATR, the average true range, measures market volatility, and yeah, you can also use the ATR to use effective stop loss orders. I mean, yeah, to set the effective stop loss. Yeah, I mean, to set your stop loss effectively and manage your risk better. If you use stop loss, of course, then you know exactly what you will lose. But the ATR, it measures volatility. We see big candles, so the ATR goes to the upside. We see the period as a 14 length. So it takes a look at the last 14 candles, and based on that, it indicates a specific level. Let me see. We see big candles, but they were already big candles. But yeah, you can use this indicator mainly for setting stop loss levels. For example, over here, if you take a buy order, yeah, you will like, all right, I see a nice engulfing candle. Then you can look, all right, what is the ATR level? It is 10. So then you can, this is the low, right, over here, and then you can say, right, okay, so on average, the price travels on a 4-hour time frame 10 pips. So it could spike for 10 pips, right? So below the latest low, you say, all right, 10 pips. So for example, is it here? 440, about here, right? So then you add I mean, is it 10 pips? Oh, it's it's not 10 pips, it's 1000 pips. But yeah, you get the point, right? So yeah, this is also a handy tool you can use. And then we have the Parabolic SCR, which stands for Parabolic SCR, which stands for the Parabolic reverse. I mean, stop and reverse. And we see some dots. Let me delete this one over here. Let's finish the ATR. All right, so we have some dots, and yeah, it's ideal for capturing momentum and determining trend directions. And yeah, it also provides straightforward buy or sell signals, making it easy to see when the trend might be reversing. Let me see over here. You see that we have dots on the downside, below the chart, the price, I mean, but at some moment we see that the price, the candle crosses one of these dots, and from that moment we see that the dots are on the top side. What you can do is take a sell order, because now we have dots on the upside. We take a sell and it results in a winner. You can also trail your stop loss. So every dot, for every candle, you change your stop loss to the dot, and that would also result in, so let's say that you enter here, or you can set a sell stop, so that's a sell, and then over here you get out of the trade, right? But also again, we know that the main trend is bullish, so we only take buy orders. So over here take a buy, and here we are kind of break even if you use the trailing stop loss method. But let's say that you aim for 10 pips, for example. Over here, yeah, it's easy, right? You get out a trade over here, and then again here, this is a buy trade. You get out here, buy, you get out over there. So yeah, the stop and reverse, parabolic stop and reverse indicator is one of the indicators I used when I started trading, and yeah, it's really for beginners. It's quite handy, quite useful to use. Then last but not least, we go to the ADX, average directional index. So yeah, finally we will cover the ADX, which measures the strength of a trend. Where is, let me see, over here we have the ADX, and the period is set at 14. I mean, the ADX smoothing is 14, and the I length is also set at 14. And here we have the red color. So it measures the strength, and an ADX reading above the 25 typically indicates a strong trend, providing a great opportunity for following the trend. And normally, because I was looking over here, normally we also see two other lines, and those give you buy and sell signals, but I don't see it over here right now. But if it's above the 25, then it indicates a trend, and then you can enter the trade. So over here, this is above the 25. From this moment, it says we're in an uptrend, and you go long. But yeah, it's kind of strange, because normally you have maybe it's this. Yeah, this is exactly what I was looking for. We have the 14 and the 20, and let me see, 25. So when the blue, is it blue? Yeah, it's blue. When the blue line is above the dotted line, which is set at 25, then we're in an uptrend. I mean, then not uptrend, but then the trend is stronger. And when the green is above the orange line, then yeah, we're looking for bullish trades, bullish opportunities. So we see a cross to the downside, and we don't take it. Why? Because the blue line is below the dotted line, so there's no strength, right? There's no trending market, so we don't take it. And then we see a green that crosses the orange line, and we don't take that one as well, because again, it's below the dotted line. But let me show you an example of when we do take a trade. That's okay. Let me go back over here. Let me see. Well, there wasn't a strong trend at the moment. This is also below. There aren't many signals for if you want to enter a buy order when it crosses the orange one, right? The green one or crosses the orange one. I would say this one, but again, it's below the blue line, is below the dotted line. So at the moment, we don't see many opportunities, which is unfortunate. Maybe, yeah, of course, on the lower time frame, let's say for example the 15-minute, then we do see many more opportunities. At least that's what I hope. Personally, I don't use this indicator myself, but yeah, it's a nice beginning. It's a nice tool for beginners to know and to just play around with. Let me see over here. Also, there are not many opportunities. Um, we do see crosses, but again, the strength isn't that high. It's low. Um, yeah, right. This could be this could be a sell, but it's a strange trade. It's also at night, so we don't take that one. No, I will keep looking for many other opportunities that this indicator gives or provides. Personally, again, I don't use it, but yeah, if you want to play around with it and see if this is something you can use, if you like it, then of course yeah, you can check out this indicator. This is the end of the video. I covered the top 10 technical indicators to help you become a more effective forex trader. If you like this video, give it a thumbs up, subscribe, and I see you in the next video.